Welcome to Market Momentum, AI and Analysis.
All right, let's jump right in. We're kicking things off with the U.S. markets, and wow, they are showing some absolutely incredible strength, hitting new peaks as we speak.
The overall picture here is just this powerful upward surge. Sure, the Nasdaq has seen a few little wobbles, but the real story? That's the Dow Jones. It's just blasting through to all-time highs and really breaking new ground.
And this is the number that really tells the whole story. 46,758. Just let that sink in. That's the brand new record close for the Dow. It just screams bullish momentum, doesn't it?
So naturally, this brings up the big question, the one on everybody's mind, right? Are we in a bubble? Or is this something else entirely? Well, to get to the bottom of that, we really need to dig into a very specific market phenomenon.
And that phenomenon, folks, is what we call a melt-up. If you really want to grasp what's going on, why this market feels so just relentless, you've got to get your head around this concept. It's a game changer. Okay, so this lays it out perfectly. We've all heard the term meltdown, right? It's that scary idea of the market just melting and sinking like a nuclear core. But a melt-up? That's the complete opposite. It's when the market melts through all the resistance and just blasts upwards.
And I love this quote because it just captures the feeling perfectly. Think of it like this super hot iron plane. It hits a barrier, but instead of stopping, it just blasts right through it. And the crazy part is, once that resistance is gone, it doesn't slow down. Nope, it actually starts its journey to the stratosphere even faster.
So, okay, with that powerful image in your head, what does this melt-up actually mean for our strategy with U.S. stocks? What on earth do you do in a market that's this supercharged?
Well, the analysis here is pretty darn clear. The recommendation is to keep buying the U.S. stock market. The whole thinking is that even if we see some dips along the way, and we probably will, the market is just going to gobble them up. They'll be seen as buying opportunities, not the start of some big crash.
Now check this out. This chart really visualizes the potential upside we're talking about. Right now, the S&P 500 is hovering around 6,600. But in a full-blown melt-up scenario, the target could be way up there at 7,300. It really goes to show you how much fuel might still be left in this engine.
So the question is, how do you get the most of this? Well, the analysis is pointing squarely at the Nasdaq 100. Why? Because it gives you that super concentrated exposure to all the top tech companies. The preferred vehicle here is the QQQM ETF, and the main reason is simple: lower management fees than its big brother QQQ. And a word of caution. The advice is to steer clear of small caps, like the Russell 2000. Right now, the party is definitely with big tech.
And this chart, man, this shows you exactly why the Nasdaq is such a beast right now. When you buy into an index like this, you're not just buying the market. You're buying a huge slice of the world's absolute leaders in tech and AI. We're talking NVIDIA, Apple, Microsoft, the whole gang. It's basically a concentrated bet on the very engines driving this entire rally.
Okay, let's switch gears a bit and talk about precious metals, because this story gets even more interesting. It's not just stocks you see. Gold and silver are in their own version of a melt-up, but dealing with them, that requires a totally different playbook.
And here's the bottom line. Both gold and silver are going parabolic. And while that sounds amazing and it is powerful, it also means something really important. It's too late for new buyers. The risk of getting caught in a sharp, really painful correction is just way too high if you jump in now.
So, what's the plan? Let's call it the don't panic strategy. It's simple. First, if you're already in, you hold. Just sit on your hands. Second, if you missed it, you wait. You stay on the sidelines. Third, and this is absolutely critical, do not chase this. Do not buy the peak. And finally, you have to ignore the day-to-day noise. Don't let the volatility shake you out.
All right, last but not least, let's pivot to crypto. Because after a really nice recovery, the crypto market is now staring down a huge test. It's run up against some major hurdles.
So, yeah, we've had some fantastic upward movement, but now the engine has kind of stalled out. Your key players, Bitcoin, Ethereum, they've run smack into a wall of resistance. And honestly, this is a real make-or-break moment. Your best friend right now? Patience.
And as you can see here, the strategy across the board is crystal clear. You wait. None of these are a buy at this exact moment. For Bitcoin, the magic number is $124,000. For Ethereum, it's $45.38, and for XRP, $3.06. The game plan is to wait and only even think about buying after they have clearly and decisively smashed through those levels.
Now, for anyone who's already in a position, listen up. These are your crucial damage control numbers. Think of them as your stop-loss levels. For Bitcoin, that's 119,350. For Ethereum, 4,300. And for XRP, 297. These are your absolute lines in the sand to protect your capital if this resistance wall holds firm and prices start to head south.
So this really brings us to the core message for today, the big takeaway. A melt-up market. It doesn't matter if we're talking stocks, metals, or crypto. It's incredibly exciting, right? But it's also really dangerous. This kind of environment rewards one thing: strategy. It rewards people who have a clear plan and the discipline to actually stick to it. And it absolutely punishes emotional, knee-jerk decisions.
And that leaves us with one final big question for you to think about. With these markets looking like they're trying to head for the stratosphere, is your portfolio actually prepared for that ride? Do you have a plan? Or are you just crossing your fingers and hoping for the best?
Thanks for joining us. Your subscription and likes will be appreciated.